Welcome everyone. Today is May the 20th. It is just a couple minutes after noon Eastern, and I want to welcome everybody to our FEG token BYDFi exchange chart the markets session with Blunt House Technical Analysis. And I'm really happy to be here today. And I want to thank the friendly people at FEG token for their support in putting these things together, and also for the support of BYDFi Exchange, who offers every session we do 2 trading bonuses. All you have to do to be eligible to win is to have signed up under the Blunt House TA link, which is available in I believe it's in the YouTube description, and it's probably under our X account as well. So again, I want to welcome everyone, for those watching on YouTube and X, and for those in the room. This is an interactive session, or we certainly try to make it an interactive session. And your questions are always welcome. So if any way that you can get them to me, I'm happy to answer them. What we're looking at today is just the daily chart of Bitcoin. And the reason I'm showing it to you is because I know there's a lot on that chart. And I completely acknowledge that, and that's why it's there. Because sometimes it feels like we have a lot going on. You know, we have a 20-day moving average, a 50-day moving average, a 200-day moving average, the 100. We have a volume profile, and then longer-term averages in the form of the 500 and the 1,000 way down here. It's a lot of stuff, right? And of course, you know, we also use, or I also use, my own indicator script, which helps me kind of guide me through trades and give me good entries, long and short. But the reason I'm showing you this is because it's really beneficial to be able to layer the metrics that we use to track and trap price. So if I just kind of quickly remove these indicators, I'm going to leave the candlesticks and the volume profile on the chart. Excuse me. For those who are looking for this very same volume profile, I'm going to give credit to, I think it's KV for Coins, which is in the community scripts on TradingView. And I really, really, really like what he's done here. It just simply works. And why do I use it? I use it because it helps me find areas of support and resistance. And it helps identify where there may be draws for price. Now, what we're looking at is simply the daily chart. But some of those things that are draws for price are the value ranges, this being the lower, this being the upper. In the center is the point of control on the volume profile. And you can see how it's kind of averaged all of that through here. Once established, these levels become support and resistance, and or draws for price, both up or down. That's why I use it. And if we kind of go back and do a few streams, and we were talking about, well, where this thing might be going, one of the things we used was the value ranges, the point of control, and then again, the upper value range. And it's basically one of those situations that we talk about where you break one level, you find the next, and those levels come in different forms. This is just an example of how we were using the volume profile. This will work on any time frame that we present it with. But when you shorten the time frames, what you start to see is the advantages of multi-time frame analysis. So we know that these gray areas in the volume profile is lighter than normal trading. We know that these gaps are going to prevent little resistance up or down. And it'll ring true on any time frame we look at. What does this tell us on the 4-hour? This is something that I really, really like all of a sudden now that I hit this time frame, because I can see how price has respected that upper value range and it seems to be hesitating to break through it. We know this is the point of control, which will always provide a shelf, right? Because it's the greatest average of that volume, and it's the greater concentrations that create the shelves, this being one of them. That is why the point of control level is a draw for price. And when we get there, let's say we break down, we find the point of control, what are we going to do when we hit this shelf? We just don't know. We have no real way of knowing. There's no such thing as a crystal ball in this stuff. But we have 3 choices, up, down, or sideways. So it could find this level just like it had in the past. Maybe gets a little support on this time frame. And if it was to get some support, what might it want to do? Bounce and maybe retest. That's the long scenario. The sideways scenario, you chatter along here, just like you did back here. What's the down scenario? You find this. You fall off the shelf, just like that elf thing. You fall off and here into the gap. And we know that when we fall into those gaps, price doesn't really put up much of a fight because it's lazy. It likes to go through, likes to take the path of least resistance to find its next level. And its next level is showing itself where? Down here, because you see the shelf. So you have different ways to find these areas of support and resistance using the volume profile. Use the shelves, look back, and you'll find benches of past price. So you have this in here, this in here, this being the big volume gap. And if you break through here and into that gap, you'll find these lower levels quicker than normal. So that's a pretty simplistic way, without a lot on the chart, to look at these things. There's not really a lot going on to confuse us once we understand how to read and what price might do on the volume profile. But we always need targets, right? There are other ways to find levels of support and resistance. And this is when I start to use some very simple moving averages. What you have here is the 20-day moving average. So whenever you're looking at my charts, you're going to see that green level, and it represents the 20-day moving average. This is the 20-day on the 4-hour. Let's just use the daily, because that's where we started. What else may we want to look at? The 50, because we always know that's a key level for support and resistance. The 200, because we know that the 200-day moving average is kind of one of the most basic bull-bear indicators that we have. So it needs to be there. I like to use longer moving averages. So yeah, I'm going to show you 1,000 days. And here's 500 days. So that when, and we can look at charts where we've shown this, if you break the 20, you're going to find the next level down here. In addition to this, right? So if we know that on a pullback, the 20 day is going to be a draw for price, that gives us a target. If we only were to use the point of control, what would happen? We'd be susceptible to it bouncing off something, right? And that something is going to be a major moving average because it's a representation of time and price. A structural element, when you start finding tops and bottoms that seem to match up and make sense. So we have a target. On a pullback, that becomes my target. Not this instantly, although I know it's a draw for price. Just as the 200-day moving average and the 50-day moving average are a draw for price. Time and price will find a way to come together, regardless of what we think and believe, or need to happen, or want to happen. Time and price will find a way to come back and meet each other. That's what this is. This is buyers and sellers who have shaken hands in the past. And current price looks for past. The 20-day moving average in this case is also a representation of past price. So in the event of a pullback, we look for here. But what do we know about first attempts? They have a higher probability of finding support and bouncing. So we have to take that into our analysis. If we break it though, we start to have targets to the downside. On our 4-hour chart, if we go back there quickly, what would be a draw for price? To the upside, we've already talked about the upper value range. But on the 4-hour, if we start to fade, well, there's the 20, there's the 50, right in line with the point of control, which is really averaging a lot of price on this time frame. That makes it a strong draw for current price. What happens if you break the 50? You don't hold the 20, you break the 50. You fall into that gap. And on any time frame I trade, the reason that the 50-day moving average is ice blue, because it's an ice hole failure. What happens when you fall through the ice? It's really, really, really hard to get above it again. The longer you can stay above the ice, the better it is. When price breaks through, it usually is the trigger that, hey, there's something going on. And we use multiple time frame analysis so that we don't get hit by things that we didn't see coming. And I think the 4-hour on Bitcoin does tell you, and always has, what might be coming. This would be a real concern if you're long. If you want to test this, it's going to bring you all the way back down into the 90s, mid-90s. But before you get down here, what's sitting around here? The 200-day moving average. Didn't really test it in here, so this would be the first test. So is it the end of the world that you come back to test the 200 on the 4-hour? Not necessarily. Could get a bounce, but you don't know. You just don't know. You just have to walk through your analysis time frame by time frame and methodology by methodology. Right? Identify those areas where price has been in the past. In order to determine where price is going, we need to realize where it's been. Nothing goes straight up, nothing goes straight down. So identifying areas of support and resistance is one thing, but then appreciating how price behaves when it reaches those levels is another thing altogether. And that's kind of what I'm trying to help you to understand. So it's not just that current price will revisit past. What happens when it gets there? Right, first touches typically find support, there's a higher probability of that happening. Look at the support price gets from the 50 in here, which is really a kind of a double bottom. Gets a bigger bounce off the 20 and 200, and then finds support all the way up. And when it does break, where does it find support? At the next level. In this case, the 50. My guess is, look at this. So what do we know? So you have the 20, you have the 50, and you have the 100-day moving average in here. That's a lot of resistance. And the more of it there is, the harder it is to break through. Was it the end of the world when it failed the 50, the 100, and the 20 in here? No. Because we've identified in here time and time again that when you break one level, you'll find the next. Where did it find support? At the 200. And when it bounced, where did it bounce to? The 20. Now, it's not pin the tail on the donkey. Sometimes it's a little shy. Sometimes you overshoot. But our job's to get you close so that you can make intelligent decisions from the right vantage point. But what happens the first time you test? So you break the 20, you bounce off the 200. Is this the first test since you broke it? Yep. What happened? Had a higher probability of failing. And that's exactly what we got. And you can see the support that you got from that lower value range on the volume profile. That's what that thin blue line is. And the 200-day. And it's just a constant search for those levels. Now, just to unclutter things a touch, okay. So now, whoops, did I just do that? I think I did. Okay. I deleted my own indicator. And what I was trying to show you was that, oops. I was trying to show you, once you're in these trades, this is not working. When you're in these trades, you need to figure out what to do with them, right? Like, how do I know when to buy? When do I sell? Well, that's just annoying. There, I'm going to deal with this. How do I buy? Or when do I buy and when do I sell? Well, let's show. Through all of the stuff that we just showed, looking for different support and resistance levels, which are going to help you find your opportunities and your risk. If we go back to this daily chart, what do we know? Well, we got a very clear buy signal back in here in April on the 11th and 12th. And through everything that we just talked about on the daily, all those different levels of support and resistance that we need to know where they are, we have a very, very clear indication of the direction of price. So through all that drama of support and resistance during a trend move, it doesn't have to feel like drama to you, because we're not front running anything. Yes, we talk about the potential of what happens at certain levels, but we're not front running the chart. We don't need to front run the chart. any chart, is all you have to do is follow it. That's all I do. Just follow the chart. Treat the chart like your treasure map. That's what it is. It will lead you to money. Not always the pot of gold. Sometimes it's a few coins here and there. Some are shiny, some aren't. Other times, it's the mother lode. But you have to do what you're told. Taking the noise out of your own head is going to be half the battle. So much of this, of what we do here, is psychological. Right? It's the constant ebb and flow of, is price retracing? Am I on the right track? Is this dead money? Is it going sideways? I don't know. Right? Is all we can do is what we're told. This is a methodology that I use just through a simple script that gets me in a trade at a safe point in time and keeps me in it for as long as necessary. Oh, it only works. Does it only work on Bitcoin? No, it works on anything. And it doesn't matter the time frame. Right? Is all that happens is the shorter time frames, just like you would anticipate, just get noisier. So what do we see in here? We know this is consolidation. We don't want to trade that. Right? We're looking for this move here. When price is kind of basing off a support and resistance level like this was, and let's just kind of fast forward this chart over here. When you have all this sideways trading, and you know it's along a level of support and resistance because we know that's the value range, right? What we're looking for are the breakouts and the breakdowns, the tradable moves, right? This is a tradable move down, in my mind, right? And you get a nice signal, and it takes you from roughly 96 and change down to 94. Then shortly after, you get a buy signal. You see the divergence that we talk about that helps keep us in the trade. And then we just do what we're told. We don't get scared by the red candles in an uptrend. This is the stuff I'm talking about. Oh, I had a nice move. 94 and change, it's 97. And it is a nice move. Pat yourself on the back. There's a doji. There's a big red candle. That's going to be the thing that scares most of us out of trades. Right? I was long. Looks like I'm going sideways. I don't know. I don't like this anymore. I've had too much time to think. I'm staring at those two red candles. I'm uncomfortable now. I'm selling. Okay. Boom. And then you go, oh, as soon as I sell, why does that happen to me every time? Oh my goodness. Oh, it just gets worse. It's like the nightmare that just gets worse and worse and worse. How many times has this happened to you? Anyone? It's more than once, right? It's happened to everybody, me included. One of the things that would just drive me nuts is washing a trade before I needed to wash the trade. I hated looking back, although I tell you not to, and I try not to, but I hated knowing that I sold at 94 and change, and price went to 95. That really bothered me. Now I don't worry about it anymore. I've established where our support and resistance levels are. Going back, this is the 4 hour again. Support and resistance. This is more resistance than anything. This is averaging of price, and this is one big massive opportunity. So it's the layering of our knowledge that helps. What else do we use? Handful of indicators that help us, just another tool that we can use to guide us. Stochastic RSI, straight out of the box. I don't think there's anything, yeah, there you go. Straight out of the box, 331414. Nothing special. You don't need to tweak anything. All I'm trying to demonstrate is that as the stochastic RSI stayed very, very overbought, it doesn't mean that when something becomes overbought, you instantly unload it. What this is telling us is that the buyers are still in the building. Just as the divergence is telling us the trend is still moving higher. This validated this. MACD. What do we know about when price is above, or when the moving average and signal line break through zero and start trading above it? More bullish things happen than bearish. Just another tool that you can use to validate whether or not you're on the wrong side or the right side of a trade. The Fisher transform, we've talked about it before, is another tool that I like to use. Why? Because it filters noise. Creates a Gaussian channel and filters noise out. Fibs, filters, and fractals. What do Fibonacci's tell us about this move? Let's find out. Let's just do this quickly. We're not going to get too forensic. But what it's telling us is, if we look for our friend 618, wow, that sounds shocking, doesn't it? Because 618 is sitting at 87,084. And again, this is just quick and dirty fibs, right? Does that sound shocking to us? It does. It sounds like a lot. We're trading at 105. Like all of a sudden we're talking about the fibs are telling us we're going to give away, another 20. Well, it's possible. How do you get there? There's our point of control. We know that's a draw for price, and we know where the other major moving average is because we've looked at them on here. The chart doesn't lie. It has a tendency to make us feel uncomfortable sometimes, but it's not lying to us. Do you remember when we looked at this breakout? We just quite simply said back here, we have to see how, actually right in here, we wanted to see how price was going to behave at the 200. Here we are, we failed it. This is a first attempt. And this case, we went through it. You're working off a buy signal. And I find that when I'm using this as an example, I get a buy signal and I'm coming into some resistance. If that buy signal's holding, there's a higher probability that I break through the resistance. And the same is implied on the way down. These are all things that we can use day in, day out to help us. But we just continue to look for past price. Looking at this chart now, as we condense it a little bit, we're trying to figure out where price is going here. We look to the left to give us a good idea. As long as price is trading above these levels, are we bullish? Yes. But we're trading kind of above the 20 and above the 50 and above the 200. And when we are, we have to start looking over our shoulders because ultimately you're going to come back and tag those levels. Time and price come together. Is it reasonable to pull back and tag the 20? Maybe you hold it, maybe you don't, but yeah, it is. Does it look more reasonable now that you come back to the point of control based on this? I think so, especially knowing that the 200 and the 50 are right beneath you. Does anyone else see what I'm looking at without saying it? What do we see on this chart? Right in here. The golden cross fans didn't miss that, right? When the 50-day moving average crosses up through the 200-day, that's typically that's bullish sentiment. Let's just leave it at that. So the bulls wouldn't miss that. Are they always valid? Not always. You know, the inverse version of it is here, where the 50 crosses down through the 200. That's bearish, but it wasn't the end of the world, if we're going to be forensic about it. So they have some relevance, yes. I'm sure the bulls were looking at that, and that's why we pointed out. But as all we have to go on are, hey, the probabilities, right? Does that increase the probability of price moving higher? Probably. Like statistically it's shown that. I'm just trading the chart, but it's certainly in the back of my mind. What else can we do to get a look ahead? Let's look at the weekly. And what's the risk here? It's starting to look on the weekly, Bitcoin is like a little bit of a murdery chart, right? Those can be problematic. And when you look at the weekly, does this not start to feel a little toppy? Yeah, it does. But we can only trade what's in front of us. You get price breaking out from major moving averages back in 23 on the weekly here. And although you had a solid move up, you found support at the 50-day moving average on the weekly chart. And what happened? Well, did price on the way up is looking to do what? Take out the previous wave's high. It did that. And then essentially went parabolic. Partly, this is more a technical perspective, but I would believe it's because it's breaking structure, right? So you have this structural level that you're breaking. And I think that was maybe part of the reason why it went parabolic. Sometimes the market gets excited. But as far as I'm concerned, it's still a bullish weekly. And potentially what may happen is you're going to take out this high up in here, just like you did through here, and maybe it just, does another leg higher. That's quite possible. We just have no way of knowing, and we can only trade what's in front of us. And we can only work off of what we know has the most likelihood or probability to move price higher or lower. Does that make any sense?
100% blood.
Okay. And I'm not sorry, guys. I'm not looking at the chat, so I have no idea who's in the room. But please feel free to ask away. I think that was Rico. It's great to hear you here.
Yeah, for sure, bro. Thank you for everything, man. Yeah, I agree with you. It does look, even me, I'm very bullish on Bitcoin, but I think with everything that I've gathered from you, like the wisdom and my moving averages, man, I've been doing pretty good almost every single day, whether it's long or short. And it's like I'm okay. And you said something earlier in the stream, like right when you first started, and I want to repeat it so everybody else can hear. It's like a treasure map. When you start to look at it like that, and that's why I love these sessions, because I swear you're like a source of so much wisdom. And these little phrases, I don't know why, but I think it's I got my butt whooped growing up to phrases, but I resonate with these. And you're right, and being able to accept if hey, we broke underneath, like let's say my strategy, I like to pay attention to the 50 a lot. If it got bearish, it got bearish. That doesn't mean that it's the end of the world. That just means that your treasure map is leading you in the short position. That's basically, you start to kind of accept it a little bit more where, that bias of just being bullish nonstop kind of gets wiped away once you start to like just really get it really refined and things like that. Like I just see it as another opportunity, another treasure map. Like, okay, I guess we lost that right there. It's a little top heavy, but we're underneath the 50. I know, my probabilities of getting a good solid trade on the 50. And I use your indicator. I mean, it's the only way I'm able to stay in a trade without psyching myself out. I've proven that to myself time and time again. I will psych myself out without the Blumhouse indicator. So it lets me cook. It
I
does let
psych
me cook
myself
and get
out
a bigger
without the
gains.
blunt house indicator. So,
He said, that's what helps me.
well, I appreciate that, Rico, and thank you. I think it doesn't matter what we're trading, and I know most of us in here will probably be crypto traders, and that's okay. But again, it doesn't matter what we're trading. Um, what I think is important more than anything is that we have a methodology that we use that works. And for me, this has been one of them. Like we looked at Bitcoin. This is the S&P 500, and same scenario. Almost looks like the same chart in many respects. But you had a very clear signal on the way up, and although we have clear levels in here of support and resistance, I don't think the market really cared. Like it went up. It started to shoot up, and then just kept going, right? So
Looks very similar to Bitcoin. That's
it
interesting.
it does, yeah.
My friend's excited. Yeah, my friend's excited today. Because even on the live streams, I've been covering D Wade. It's just some stocks just to have fun for some people.
Sure.
And we were talking about it on the channel way early. When it was at $10, he had to go through the dip actually and just kind of held. It traded underneath the 50, but this thing has just recently broke out like crazy. So if anybody in those prior streams when we were talking about D Wade QBTS, that thing is blunt. Look at that thing.
What's it called?
Q8 is QBTS.
QBTS. Okay. Whoops. D wave quantum. Okay. Hello.
Yeah, and he had to go through the dip. Like we talked about it. I mean, we talk about it all the time. He has some crypto because obviously he's close to me. A good friend of mine. He just ordered some XPX merch. He's excited for that. He's a true supporter, and but he's a stock trader. This is what he does, and
Mm-hmm.
he had to actually experience this dip. And I told him, I was like, this is technology. I think that if you can just wait it out, you're gonna. I didn't know it was gonna happen this fast, but boy, did it break out. Blood.
Well, I appreciate you bringing this chart up because whether you're trading crypto commodities, it doesn't matter. To me, it's just a chart, right? It's the chart is a near real time representation of what money is doing, not what people are saying, and it's designed to block out the noise, and that's the noise of what people think, we hear on TV, what we hear in spaces. Like it's as interesting as it is it tradable? And one of the things that I hope you can take away from these sessions is that what we're doing in here is we're giving you information that you can apply to your trading today, that will make a difference today, that will keep you out of trouble today, and hopefully make you more profitable today. And if this is a stock, like look, let's be honest. If you believed in this company, and I think this is the dip you're probably talking about, right? If you believed in this company and you own shares at 2 and change, I think it would be safe to say that if I own this thing at 2 and change, I don't really know anything about it, but that's not a lot of risk, right? You could buy, a few thousand shares here and there, and not sink yourself. So probably felt like low risk, high return. And all through this little up and down stuff, you're hoping that you're getting the breakout. But how do we know when the breakout's coming, right? Well, the script is one of those things that kind of keeps us in the game, right? Keeps us in the know. We just don't have any idea which one becomes the one that takes off, the one that you believe in actually showing you that it's actually going to happen, right? Well, here it is.
I think, but I don't mean to cut you off. I love you, brother, but I wouldn't doubt that. Like, I know that sometimes the script, and anybody who gets the script, like, give yourself a chance to like just look at it. I know there's moments like right there where it might look really choppy, and you're like, well, how is it making me buy in and out? This is, Blunt's the creator. This is somebody who uses it, and somebody who, I experienced my good things, and where I could have. It's not that I didn't get it, I just didn't understand it. This is when you layer like a moving average. Like,
Yeah.
to me, I 100% bet any money right now, but that main one that pumped up was a serious moving average that it broke, and the whole time that it was on this downtrend and this choppiness, it was just trading underneath a significant moving average. When you put the blunt house indicator together, when it breaks past that 50 or something significant to your strategy, that's where you really see, at least for me, where I feel like I can have the confidence to be like, this is the runner. I know this one is, it's been, choppy for a while. Here goes the break.
This one's really interesting because there doesn't appear to be, somebody maybe had a little jump on earnings, maybe earnings were positive. I'm not really sure. As a technical trader, I don't care, right? If this is a company that I believe in and I can see it consolidating through here, this is the one that you want. Like, it's either going to up, down, or sideways. Well, here's our sideways option. Next is going to be up or down. You get a signal, you have no idea it's going to go parabolic. And I have no idea what happened up here, but we did get an opportunity. So the way this script works is that on this, as you start to see this arrow, the band will flash on and off because it's kind of an early signal that there might be a change in direction. So you would have had some sort of an early indication that something was up. You had no idea, though, that it was going to be a gap down, right? A gap down that broke a major moving average. So I have no idea what caused that, but there was signs that there was going to be a bit of a sell-off. There you find some support at the 50. This time you break it. Yeah. Not every move is a runner, but the ones that you catch that are, you're happy you were there. Like, this is another example.
Tomorrow we're gonna hear you, Trey.
Yeah.
This thing has some potential, man. It really does, and I mean, it's definitely tradable because it's so brand new, And I know, I lean towards more your side. Like, I don't want to care too much of, I get lost in the fundamentals, but when it comes to like these chips and stuff like that,
Mm-hmm.
and it being really good, that's why it was like almost bottomed out forever. It was just
Right.
trading sideways, and now it's having that pump. How high can it go? We have no idea, but
No, you don't. It does get good volume. That's kind of what I was checking because you want to make sure that, if you don't have volume, you could be left being the one without a chair when the music stops, right? You can't. There's no one for you there to sell into.
right.
But this is a great chart because it helps us. So you have a gap up. Love the move off the 50. Right. So I have a friend of mine who helped me back test this script, and he's noticed that when you have signals that flip like this, so you would have had sell signal, and then all of a sudden, boom, the next day you're starting to show a buy signal. He's noticed that when you have these, that sometimes they produce big moves when they show up like right after each other. And I've
I will
noticed
start
now that
taking
he's
note.
pointed it out. It's like, oh, have you seen a yellow, Volkswagen today? Well, now that I've said that, you're going to see them everywhere. right? It's like,
Right. Right.
yeah.
Right.
But what is this chart telling us? It took off, went parabolic. We get the divergence that we talk about to tell us we're in an uptrend. You get a little suspect of this gap up here, right? Because it's like the horse in the barn. The horse doesn't like to get too far away from the barn, and when it realizes it is, or it's close to it again, it might hurry its ass over there, and price might want to come back and test this level here, or the T line. The 5 EMA on this is the daily, and that's the T line. And if it does, is it the end of the world? No, you just want to see if it holds, right? Because as the chart will tell you when it's invalidated, right? When your move is invalidated. Here's the 4 hour. Like, this thing just.
Yeah, just with that one thing that you said, when you can get passive and not feeling like it's the end of the world, so much changes as far as like
Mm-hmm.
the way that you see every trade and every possibility. It is, I mean, I think over 90% that your mind is just, it's you versus you. The chart is telling you what's going on, but
Yep.
most of the time you're fighting yourself.
Yes. And, I'm probably one of those that does a lot of that, right? I have a tendency to think a lot, and and sometimes too much, right? So that's one of the reasons that I've tried to put some structure around a few things. Let me just get rid of this. This is that.
I think that's why your stuff works with me because we must be close personality types or something. If we took the Myers Briggs thing or something, because I tested it out. Like without your indicator, I will psych myself out over overthinking this that but the, whatever, and then the indicator is just like literally just being as stoic as it can be, and just like it'll see three red candles and nothing will come up. Like it'll be like two red candles or something. I'm like, oh, is it over? And then really that indicator just helps you wait for that nice little stretch. It's nice,
Mhm.
and it's been compounding because I've caught so many of these little stretches where I would have psyched myself out. I'm seeing that portfolio just grow little by little because it's compounding and I'm catching these little runs every here and there.
So I think that's really important because it's really helpful. I believe that when you become confident enough to take the 20, 30, 40% profit and not wait for it to triple digit, when you realize that the moves that you see, and maybe I'll just try and shorten up a time frame to see if, here's a good example. Just wait for, there we go. So this is that ETHFi project that we talk about. I have no idea what it is. I don't promote them. I'm just a chart that I like to trade. Down here we have the lower value range on the 1 hour time frame. Point of control, upper value range. So here's our gap, right? And this is the kind of stuff that you might get saved in now, right? So you're coming out of consolidation. You know that you're in your sideways movement. You got up, down, and sideways, and you finally start to get a move higher, right? You do get a signal to go long and all that. I get it, right? But we're not all looking at these technicals. Not everyone is, right? Most of you maybe had never up until this point. I have no idea. But when we're talking about, oh, how come is whenever I go long, price goes in the opposite direction? We've had that conversation before. Why does that happen? Chances are, if you're one of those people that tells me this happens to you, you're probably more inclined to buy a dip at someone's advice or to say that you'll never hear or see price this low again and now we're just taking off. It's not how it works. It's not up to us to think through this. I'm not smarter than the chart. You're not smarter than the chart. We might be competent at what we do, which is awesome, but I'm not smarter than the chart. is all I know is that if I'm not looking at certain metrics on this chart and I'm not respecting the language of the market, I could make a huge mistake. You guys know what I'm going to say. Tries to break out, fades, sell signal. The move down does what? Takes out the previous wave's low. This is what happens. So this is how it happened on the chart. The story I just told, this is how it happens. How come whenever I buy, everything was looking awesome. It was consolidating, finally got some green candles, boom, I'm in. Oh no, what happened? You know, you're in till you're invalidated. It's as simple or as complicated as that. You know, pick a time frame and trade it. Become indifferent to price, and I think that's a challenge for a lot of us. It used to be for me in my early days, right? Is having an attachment to price. Today I'm indifferent to price. I don't care what it does. Is all I do is follow the chart. Why? Because it's a treasure map. Like, sell. You got a beautiful sell signal up here. You gotta like these ones when you're trading above all the major moving averages on the time frame you're trading on, because you know that it's going to come back and find a level. Another example, layer. Whoops. There we go. I was wondering where the rest of the chart was. Here's layer. This thing went nothing but up. Blasted through these levels, but look, what really did it settle at? The 50. Does that look like a double top on the 4 hour? Or at least, I shouldn't say double top, that's not proper, but it's two equal areas of price. It's not a double top until you break that center channel, which it does in here. Did you have fair warning? Like, is this not the simplest of setups that we can find? Like, double bottoms and double tops are things that, a lot of people in this space talk about a lot. So it's not like we're unfamiliar with them. So here's your double top, right? Those are your equal points in price. This yellow line, horizontal line, is simply there because that's where, back during this big move when I woke up happily one day, was a short level for me. But it was simply drawn off of, because there's very little price history here, just this, right? Past price. If you want to know where price is going, you have to know where it's been. So I drew this line just simply off this level because it was an area of a top that connected with this at the end of the day. And that's where it faded. Now, I could have also said that, it faded right at the upper value range of the volume profile. Yeah, could have, right? But I was a little south. No big deal. It's not pin the tail on the donkey, right? It gets you in the right area to make a safe, profitable trade. And, as we start to look at things on how it broke down, did you get 5 minutes of support on the 4 hour? Yeah, kind of. And then it broke at the 20. right? There's your 50. So you can tell you've got resistance here. And all of this is happening where? At the point of control on the volume profile. So you've got all of these things adding up. Oh, equal points in price, pullback, failure of the 20. Ultimately, you fail the 50. And as soon as you fall through the ice, it's incredibly difficult to get through it again. And in this case, price just sinks straight down. And it starts trading on the south side of all these levels. Like, to make it more simple, here we go. Sell signal, got the divergence, and even through this consolidation, you didn't get an indication that price was even thinking about moving higher until in here, which lasted for 5 minutes. And then the trend down continues. Right? That's what that would have looked like on the 12-hour. This is why we use multiple time frames. Because although that looks like dead money on the 4-hour, what you were seeing on the 12 is that this trend down was still intact. And technically still is. And every challenge that you've had can't break these levels. Like, as a trader, that's got to be invaluable, I would think, to know how long to stay in the trade. When do I buy? When do I sell? We don't want to, trade the chop. If we're in the chop already from way up here, and you're still seeing that the trend is intact, does it make sense to stay in it? Yeah, probably. As long as you're not paying too much in fees if you're levered or anything, but it's great to know what the trend is still intact. And if this was a stock and you had that ability and you were trading options on it, that's pretty valuable. To know where prices could eventually end up, just based on simple targets. And for interest's sake, let's look at Apple. Daily Apple. Sorry about that. Take this off. There's our volume profile to the right. Lower value range, upper value range, point of control. Does anyone else here think, Rico, you tell me, that this might be a critical point for Apple based on this chart? Yeah.
Yeah, for sure.
Like, you're sitting right here at the 20 and the 50.
Yeah, nice little cross right there. Point of control.
Like,
Looks really good.
Yeah, if you can. Yeah, see now.
And the indicator set to be inside of it already and stuff. Mm-hmm. This is what's nice about it. Because we're barely seeing where it's a good idea, and this is a perfect example of how the indicator knew it was a good idea a little bit ahead. It was already knowing that something was going on, and
here you go.
Yeah, it's crazy.
So okay, so when did this happen? Friday, the 16th, we gapped down. Or sorry, no, we gapped down at open on Monday. That's what happened here. But I don't like this 1-hour chart. Like, the 4-hour is actually uglier, because if you don't get any support on the 4-hour with the 20, the 50, and the 100 MA in there, you start to see how these little gaps come into play. And there's the point of control sitting at 192-ish.
Yeah, and it seems to be respecting, like, staying underneath the 200, especially because Apple's like more traditional stock. A lot of, people pay attention to that 200, and you could just see it basically underneath that red one. I'm pretty sure that's your 200 on your chart.
It is, yeah. No, the 1 hour is actually quite clear. Like, this divergence on the 1 hour between these two levels is really solid. Like, it doesn't look like it's waning. It looks like we're doing this again, right? Here we go. We're going to challenge, just like I showed you on that other chart. Well, here you go. There's some green candles. I'm breaking the 50. Good for me. Uh-oh. Hang on. What's going on? What's going on? Well, I'll tell you what's going on. This divergence is still intact and your trend down is still intact, right? And this is where we come back to the one that says, how come every time I buy, the next time I turn around, price is starting to fade? Well, this is why, right? If you're
That's a
using
good
this script,
example.
you won't get
That's a
caught.
good example right there, Blunt, of me just like, let's say I was only using the 50, right, without the indicator. This is a perfect example actually right here where I would get in trouble. This is where like if you actually like anybody who's using the indicator, like give yourself like a solid 2 months. Like don't even rush into it, like where your brain can digest it, because that right there, somebody like myself, I've been liking the 50. That would have been a perfect example where I could have got wrecked, right? Because it's about to break the 50, it's looking good, but with the blunt house indicator, you can see that that's been a red trend. I mean, it's a short trend. It's actually told you a long time ago just to stay, you know, in a short basically. And even during this break above the 50, it still wasn't enough to trigger a signal for you to go long. That's where somebody like me goes, I know that's not a real break above the 50. This is actually still intact going, in a downward trend. And I can actually stay in that earlier short that I was in.
Mm-hmm. And this is kind of what we talk about all the time, right? Here's the previous wave's low. Price goes up and fades, and it comes back down and takes it out. And in this case, what would it be drawn to? Well, first off, it's kind of in a gap in an area that we know is super light trading. So would it take much to bring it down to the upper value range on the volume profile? Nope, I don't think so. And we've take a look at our chart. There's the 200 MA on the 1 hour, which sits right in the middle of a gap. And here's the point of control. So the draw for price. So when I'm talking about the draw for price, this is the type of thing I'm talking about. Difficult for price to stay afloat here. Takes a lot of money to reverse something like this, right? We know how this works. We've seen it a million times on different time frames of any different assets. We know this is a draw. We know this is a draw. We know this gap is dangerous. The point of control is where everyone had a coffee, sat down, and shook hands. We know that's a draw. And so on and so on. Level by level, current price revisits past. And I'm not, I talk about this volume profile a lot because I think it's useful, and it doesn't matter the type of methodology that you use to trade, and there are many different ones. This volume profile will be useful in every scenario. In every scenario, because it's identifying those areas that price can move up and down quickly. We know it's lazy, takes the path of least resistance, and it shows us where it is. And sometimes it's uncanny how price moves through those levels. And I think that, the combination of the volume profile, obviously with some major moving averages that you can flip on and off as needed, but this is powerful. The scripting alone with the volume profile, I think, is a tool that will not overwhelm anyone, provides you with proper risk management and opportunity management as well, because I think it's only fair that we look at both sides. And it's something that you can learn quickly, like to your point, Rico, and I think that's actually key, that you don't have to get lost in the thick of thin things to use this methodology.
No, not at all. I wanted you to check this out because this is a perfect example of how I use your indicator. And I think anybody who's using it would like to see this. It's the Solana chart. It's the 1 minute chart, but this is like a perfect long that I just took while you were talking, because I wait to see this little thing right here. When you match up this indicator, go to Solana. I'm trading it on the Coinbase. That's what I'm looking at, the Coinbase one. And then just like it's right on the 1 minute chart where like you see the indicator and it's at the same time it's breaking past the 50 moving average. And when you connect that stuff with that volume profile, you kind of get an idea. So that long trade down there, if you look, there was other buy signals during that downtrend. But when you match the indicator and it breaks past the 50 together at the same time, that is super powerful. I noticed that I catch a lot of runners like that. And you will see where like this is why I'm saying like let the indicator, let your eyes adjust to it, because all these prior buy signals it would not get me because they didn't break past the 50 at the same time, almost like this simultaneous push, as you can see right here on this one right now. And this is a perfect example of like the runners that I've been catching right now from down there and seeing it break past the 50. That's my confirmation candle that it clearly broke past the 50. I'm in it, and I'll just ride that wave till when it's done.
Geez, Rico, you make that sound so easy.
It's not that it's not that easy. It takes practice, though. I swear. It's just like I said. If you're using an indicator, give yourself 2 months because you see the signals to the left is a perfect example how you can get psyched out. But
Mm-hmm.
if you stay true to a strategy that you like mine's is the 50 with the blunt house, and basically you got the T line and the it's like the 8 moving average, I believe, all kind of working together anyway. So you have some lower moving averages with the blunt indicator, but when you see that matchup right there and that break right there, that is, I mean, right now I'm drooling over this trade because it's a quick gap and go trade that I can just follow that little treasure map really quick. If it's done, it's done. I take my profits and I'm done. But you can see on the left where if somebody just got it, they would have got psyched out a lot of times. But if you look, it actually crashed to 50 all these times. So you want to wait for
Yeah.
what is your confirmation candle? I think is a good question people should ask themselves when they pull the trigger.
Mm-hmm. Well, it's funny. So this is kind of an interesting chart, the 1 minute, because it's doing everything that we say price does. Um, and you could see these failures of the 50. So you were totally correct that a breakout of it was going to be meaningful. You could see how price along the 200 MA as well was being respected. So a break through that level was also meaningful because it's structural, right? So when you look back, look even through here, you see a lot of price along this level, and it becomes structural. So that makes the breakout even more sellable, right? And you're looking for targets where price might be going. As long as So I talk about using major moving averages as your targets, and those are areas where you can take profit. Simply, right? That's why they're there, and I use them for support and resistance as well. So, do I automatically close the trade when I get to the 20 or the 50 in this case? Traditionally, I probably would have. Right? That would have been something that old me would have done. Right? I'd hit because you want to know what targets you have to take profits of when you enter the trade. So I would be using those major moving averages as an example, and I'd be taking percentages off and leaving runners or taking it all off. It would all depend. Now, my approach is a little bit different. When I get to these levels, like you see here, and I see this divergence, this big fat space between here, and price trading on the north side, no way. Now I won't close these trades. Now I see these are runners to me now. Whereas before, the responsible thing to do was, and it still is to take profits. I get that. I get all that. Where you take profits, though, will determine how profitable you are. And this is telling us that it still wants to move higher.
Try to break the price from the left, the previous price. That's what we're looking at. If you zoom out a little bit so we can see where, we always look right here, these tops over here. If it can break past these, then,
Mm-hmm.
we got even a bigger runner. If it doesn't break past these, and this is thanks to you, Blunthouse, man, I'm telling you, they say the game is sold, not told, but you tell us too much. And I know that, if they can't break past these previous highs over here, then maybe I could take profit here, especially if it has a signal. But if I see it break past that, you'll hear me thinking she's a runner, she's a track star. I start having fun with this stuff.
Yeah. Well, okay, there you go. Like
There you go.
it's a little bit of a
But we still
test. I
don't have
mean,
a signal.
no, we
Yeah,
don't.
but let's see how you would play this. We're in the trade. We're
So,
up 10%, so it's not.
so yeah, and I'm sure you've all kind of been involved in stuff like this or trades like this, and this is on a super short time frame. But for me, and this is where it becomes tests your metal a little bit. It's If the divergence is intact, I'll stay in the trade. Now, assuming when I say that, that I got into the trade somewhere down here, not up here, right? That's the difference. Do you have a close below the T line? No. This could be a simple situation where sometimes you get 3 red soldiers and then you bounce. Right? If you break, what do you think you're going to break to? Well, this is the point of control, because we know that that's what the thin red line is. You hit your head on it for a few candles, went sideways, and the move up continued. What do we got? 10 seconds left on that candle. So we'll see if we get a close below the T line. And when you do, it often signals that that move is either tired or pretty much finished. But you have to make sure that you just don't take that as a grain of salt. You have to make sure you do the proper analysis when you're there. So we did get a close below the T line. Watch this. It's
No
going
signal.
to double top this little thing here.
This is this is where like usually sometimes, and I might still get like I'll still be in the green and I'll still take profit, but this is where I normally would get faked out.
Yep.
But look how there's no signal, and because of this, this is where I've been getting the runners, because this is normally where I'd be like, okay, I'm out of here if I did not have the blunt house thing. But now I'm just be like, you know what? No matter what, I'm gonna get a profit off of this trade, so I'll just take the small profit and I'll wait till I get that runner. But it's exactly in these moments right here where it's starting to scare the most traders, that you're like, but if I get a red blunt house indicator, then I'm out. It's still a green trade and I live to trade another day. But if I'm bold enough to trust the indicator and seeing how it's been working for me later, it could be one of those times where it's just a little quick, just a little retest, and then next it runs right back up anyways.
Yeah.
We'll see though.
What one of the things that I want to be able to help you guys with is, if so, for example, use this chart. If we get you in the trade at the right time, and when I say the right time, I don't mean the lowest of the lows. This is built like the secret sauce actually is the stochastic RSI stuff that goes on in the background, because we want to keep this false signals to a minimum, right? But if we get you in early, like that quote unquote safe profitable trade area, which this is, when you have to make a decision in the future on these candles, it's an easier decision to make, because you'll say to yourself, well, I'm up X%. I don't want to give anything away, and I can always re-enter if I'm wrong.
And then boom, just like that. This is a perfect example of how this indicator works for me right here, guys.
So this is the part that tests your metal, because you don't want to give profit away, but yet you see that divergence hasn't broken yet, right? And then it's kicks higher. Sometimes you'll notice that it'll kiss the level but not break it, and then boom, price spikes higher.
That's brilliant, guys. I mean, I've been listening in, and this is, may I call this the perfect infomercial? It's amazing.
It wasn't set up for that, but yeah. This is
the 1 minute chart, and Rico, I mean,
yeah.
Congrats. You're trusting the indicator, and it's powerful.
Yeah. No, this is a great example of how this works. Like, because quite often when we're looking at charts, we're looking at it from a historic point of view, whether that was 30 seconds ago or a day ago, right? But we're looking at it from a historic point of view, and when we do this, we actually get to see the candles unfold in real time in order to test what we talk about. Notice the level of the 20-day moving average, right? In another minute or two, it's going to be basically right in line with the bottom of these candles.
Yeah, this is a shorter time frame, so the trade is probably going to be gassed out somewhere around here and stuff like that. But that was exactly, I took my first initial profits off of that, and now if it wants to run higher, it's fine. But that was like a lot of fun right there. Actually, that got my heart racing, because I wear my heart on my sleeve. If I'm right, I'm right. If I'm wrong, I'm wrong. But that was an example of like times where like I would have been really, really shooken out and missed out on some extra profits and stuff. And it's crazy how like as it starts to compound, like just give yourself time and it starts to compound, you're really compounding not only your bag, but your confidence. That's
Mm-hmm.
what I've been getting stronger with is
Yeah.
the confidence in the trades. And
Yeah.
um, the runners is where we start winning. It's like when you double down on blackjack, you don't want to play blackjack just to hit 21. You actually want to hit on a, that you double down and, the card is set right for you.
Mm-hmm.
So it's pretty nice.
Yeah. This is the part that tests us, right? When you're in these ranges of highs and so on and so forth.
Yeah, that was cool, bro. I love it, man. I got to take my profits and just took a nice little chunk because I still have, and this is another example of how I feel. I could have probably just still held it because I didn't get a signal. I'm using a little bit of my intuition, which I shouldn't be using too much of that, right? But I've been watching this 1 minute chart and I know when it's starting to get gassed out a little bit. You'll start to
Yeah.
almost like know the rhythm of it. And that's why I'm okay with taking that profit because I'm
There you
not
go.
front running the chart there, and there it goes, and that's why I did that because the volume profile is that other layer is like we're already at the upper valley range. Like, how much
Mm-hmm.
do you want to get out of this? Is it okay that it turns around and now you get to short it the other way? Why
Yeah.
not?
So what you're talking about, and tell me if you think this is true, and because I think this is really important for anyone who's going to listen. Have you found that since the trades you've been making, like you have a better hit rate, you're making more successful trades, and the profitability on the trades that you're winning on has gone up? Have you noticed a willingness to take profit more frequently now?
Yeah, actually, I do because I'm keeping the trades green on a daily basis, almost like it's also goes like with the taking the being okay with like taking the trade and not beating yourself up because that's a new thing that you'll learn because since you're going to have another opportunity, you're not going to be scared to hit the sell button. Sometimes, a lot of times I feel like we don't hit the sell button in the wrong times because we feel like we're not going to get another opportunity. But I mean, this is why you only take a little bit of the profit. Let let it see if it's going to keep running because I mean this indicator is pretty powerful, but it's turning to chop sideways. We're right on the point of control. It is a 1 minute chart. It can't go up forever. That's another thing. When you start accepting that it's not going to go up forever and you got a great trade, yeah, it's easier to sell and just be like, cool, I'm going to catch the next one for sure. I'll catch 2, 3 runners a day that I'm
Yeah.
comfortable with.
These candles, remember this wick in the 20-day moving average? Right there, remember we said how relevant this was going to be? Well, guess what you wicked, right? Time and price came together. This green candle wicked the point of control, which is at the same level as these candles here, like we just showed, and moved higher. And you still don't have a signal. And if you, wait, no, we're over here. If we take the candles off, all of that stuff that makes us manic, right? Especially on the short time frames, the large green candles, the large red candles, the inexplicable dojis and things like that. That those are the things that happen on those time frames. That's the stuff that causes us to think too much. And what you're looking at right now doesn't look like a lot, but to me it is. There you go. Like when I start to see without any candles on, maybe something going on. Oops.
It's breaking that moving average at the same time.
There you go. So
Yeah.
so when do we start looking for opportunities to short? Right. Well, this is a good example because we have some flat trading, but the answer really is like when you're trading above the 20, the 50, and the 200, as soon as you feel like maybe the price exploration of those waves is done, you have to understand that you're going to come back and test those levels. It doesn't matter the time frame. Doesn't. This could be an hourly chart, a daily chart, a 5 minute chart, a monthly chart. It doesn't matter. These setups will show themselves again and again and again and again. Is all you have to do is follow it. You don't have to understand why. You don't have to know why. It doesn't matter who said something. Is all that you have to do is follow the price on the chart and do what the market tells you to do. Now, this is the first test of the 20-day moving average on this time frame. We talk about this all the time. So it'll be interesting to see how price behaves. Is this just going to be a big parabolic move up? Price goes sideways and gets first touch support? I don't know. We're going to find out.
Love this right now. It's like once you start layering it, I swear I love this right now. I'm over here like on the edge of my seat because it's like you get to see it in action. Where like I think like you have to almost like see it in action too, and see like how when you associate it with these moving average, how powerful it can be because it takes time to be able to like you literally brush off the false signals. Like you'll be able to brush off the false signals where you might feel like they're tricking you right now, and that's just because it hasn't clicked with your strategy, like with a moving average. But now you see that blunt house and it's breaking the moving average at the same time, and it's giving you a signal. Is this your short opportunity? This is where it starts to get very powerful and stuff. Here goes that double switch that your friend talked about. Oh, he might be right, Blunt. Look at that.
I hope to
There
have
goes
some.
the yellow Volkswagen.
I'm gonna
There goes the
have.
yellow Volkswagen.
Yeah, I mentioned to him that I wanted to bring him in here to talk to you guys as well because I really respect this man. I think he's one of the better private traders that I've stumbled across, and he also trades options better than anyone that really I know. So I think he'd be a real value add, and he's just a grounded, down to earth, genuine person. And I think you'd get a lot out of listening to him. So yeah. So look at this one. This is a real interesting one, Rico. It's you get that flip at a major moving average, and then look.
Yeah, that's that yellow Volkswagen. We're gonna call that one.
And look here.
Once you see it, you cannot see it.
Yeah. So another, and this is just a process of checks and balances for me, right? Do these things validate each other? And yeah, you run the risk of analysis paralysis. We know that. But one of the things we talk about is that when the moving average and signal line on the MACD is above zero, which is this level, the probability of more bullish things, quote unquote, happening is higher than it is when it's down here. Now, do you have trend reversals at the tops and bottoms? Of course you do. But one of the things that I look for, because one of the things I wanted to talk about today was finding the setups that work for you. So let's just get into that then, because that's what I wanted to talk about. One of the things that and we'll use your chart because we're looking at it now. So when I am analyzing a chart, this could be the weekly chart of oil. It doesn't matter. Don't care. This just happens to be a 1 minute chart of Solana. Here's your sell signal. You're obviously in a downtrend. Right? When do I want this trade? What are the type of setups that I like the most? What I'm looking for, ideally, do we always get it? No. Sometimes it's a combination of what you like and not all of it. But what I'm looking for is, obviously we want to go long here, we're looking for a reversal. I'm looking for this oversold stochastic RSI that's been kind of dragging the bottom of the ocean. And I understand that what it's telling me as it's doing that is that the sellers are still in the building in this case. And I'm waiting for that to change. Right? I'm not going long here, I'm not going long here, I'm not going long here. Looking for this to start to pick up from the bottom of the ocean and show me a little bit of chutzpah that it wants to move higher. Same with the Fisher, right? What do we know about the Fisher? It doesn't give us a lot of signals. The ones that gives us, though, are typically meaningful. And it shows us down here that it wants to move higher. At the same time that the stochastic RSI is showing me something. Now, your MACD We talked about the reversal part. So this, all this stuff down here, price going nowhere. You're looking for the, for the moves that are going to be momentum moves. At least those are the ones that I look for. When you see this, what's showing on your chart as a move higher, what's happening now? Well, I have this, to me, is a safe, profitable entry, or is showing the probability of it being that. I'm coming out of this prolonged period of being oversold where the sellers were occupying the building, and now it looks like the buyers are coming in. I get that same confirmation in my Fisher, which, because it's a noise filter, it's using that kind of Gaussian channel to keep all the riffraff out, and it's giving me a clear indication of what's happening. And then lastly, the MACD follows. They're in this order on my charts, stochastic RSI, Fisher transform, and MACD, because 9 times out of 10, that's the order they go in. 1, 2, and 3. And it doesn't matter the time frame. So that's the kind of setup for me, if this was, as a long trade, that I like to look for, and that's on any time frame I can find. They don't all turn out like this, mind you, Rico, but that's the type of thing I look for. How do you tell on this short time frame? What can you do to check the trend? Change the time frame a little bit. So here's your, and I'm sure you're doing this. So here's your 5 minute. Let's pull the volume profile into view here for a second. Now, this is multi-time frame analysis at its best. So you've had a really good run on that 1 minute, and this is what that 1 minute looks, or that run looks like on the 5 minute. So there's an element of confluence that comes into things, right? You've got confluence on one time frame, and you want to see, hey, am I still good? So you look out to the next time frame, and so on and so on and so on. So that 1 minute chart we've been looking at, here it is on the 5 minute. Tons of divergence telling us that this trend is still intact. Impulse up, we see this all the time, right? When you see the impulse up and then sideways back to these levels, usually you pop. There we go, right? Prices moved a little higher. So this is still trending. This trend is still intact on the 5 minute. The Fisher is still fully diverged on the 5 minute. So that's making me feel like, hey, I'm probably safe. The MACD is starting to show me some lighter histograms, but my moving average and signal line are now above 0, so I'm inclined to think that, I'm more safe than I could have been. Price is ultimately what we watch, right? When I shrink this down, though, and this is what you were looking at on the 1 minute, Rico, I'm pretty sure, is that structural stuff, right? If you can get through, right? If you can get through this in here and start to test up in here, this is the upper value range on the 5 minute. That gets you into this big gap area, which we know what happens. Price can rip through it, both up and down. Right now, this 5 minute candle is just simply a red candle in an uptrend. Just as this was a green candle in a downtrend, as was this one, as was this one, as was this one, as was this one. Points and flats, points and flats, points and flats. I know in my Telegram group it pissed people off because I talk about it too much. These points, they're telling you something. When you have big moves down and then you get a big point like this in a short MA, that's a snapback, my friend. Pay attention to that. Those tend to be profitable. This is a snapback. What you're in right now is a snapback. Let's look at it on the 15 minute. So let's just back up for 1 sec. So what happened here? Price got hot. That's why this is spaced out and gapped out. We just got a new candle. all of this air that's been created because of the parabolic move up gets eaten up by price, just like a gap can eat price. So as all it's done is come back to these respectable levels to average itself out. Let's see what happens as we get into this kind of tricky zone. But if we go to the 15, does this still look like a pretty healthy move? Yeah.
Sure does.
Right? Like this could be one of the ones, Rico, that turns into a runner, like you said. You just don't know. And you know, the first few candles have all the promise in the world, and then it can reverse itself. I understand that. But we only work off the probabilities that are in front of us and the things that we know. Right? Where did this move happen? Ha. Boom. Okay. So we got a nice move. So price breaks the 20, gets resisted. I'm going to say at the 200, but it did kind of wick that area of the 50. But I think the 200 is most appropriate. But it doesn't hold. Like it can't break it. What does it do? It comes back to the 20. First attempts typically fail. And you got, watch this. Pay attention to these. They usually tell you something. So you get a nice candle in that 20-day range, blasted through the 200-day moving average, and when that happens and you don't get, right, so here's your break of the 200. This is your first attempt of it, and this one went through. And that happens less frequently than the failures. So what's the message there? Potentially the message is that, hey, this thing has some wheels and maybe it wants to move higher. Look where that candle closed. It closed above the 50. So what we're waiting to see now is, or I'd be waiting to see, does this 15-minute candle make contact with the 5 EMA and the 50 in and around here in the next 7 minutes? And if it does, what happens to it? Is this just going to be, okay, big parabolic candle up, and then we have a few candles, that go a little bit sideways to give our averages an opportunity to catch up, and then boom, it hits it and goes higher, just like it did on the 1 minute before.
Probably a nice little trade off the 50, and it'll probably it looks like it does have wheels, like you said, like on the higher time frames.
Mm-hmm.
Sort of one it might test the 50, like close that gap a little bit and then pump up again. But I mean, this is a great example of layering some of these indicators and your entries and exits, and being able to catch some of these runners, because that's where things compound.
Mm-hmm. If this thing is to break out here, let's see. So if you break out here, you're going to see the 50 as a target and your point of control as a target. And it being in this trade and it's looking like it's run a little bit for you, this is the kind of stuff you want to look outward on so that you have a real good understanding of, okay, what's my upside from here and what's my risk, right? So on this time frame, and I think you're doing this more too, I can kind of tell, but you're actually looking for the risk first and the opportunity second. I think that's what you're doing anyways. I can sense it. So if you look at the risk on this chart, you're going to see this down here. You do not want to give what you've earned away in this big gap. If you pop, right? If you pop here off the 20, can you challenge this? Yes. Right? You're going to look for the shelf. Right? But right now, this 4 hour feels like it's a little bit in purgatory, right? It's a little slippery slope here. So just kind of, mind if you're starting to get breakdowns, like, okay, so your 1 minute
Yeah, I cleared profits already off of that trade.
Yeah.
I've been trading because I do think that there's like on the higher time frame, it is going to come down, most likely fill that gap. That's what it literally lets you do. It lets you be okay with whichever way it's going to go. I think the best thing, like you said, is the treasure map thing. Like
Yeah.
I'm happy taking my trade and taking a profitable trade, waiting for my setup to come all over again where I feel
Mm-hmm.
comfortable. I don't have to trade 30 trades a day no more. I don't need that headache. I'm cool with three good runners that I waited for, and I lined them up really nice.
And I think too, like as those in the room start to kind of do what Rico's talking about, you're going to find that you trade or you monitor less assets, right? So on the crypto side, what do I look at? I'm always looking at Bitcoin for obvious reasons. I'm looking at some alts that I like to trade. There's a few of them. ETHFi, Layer's been fun. Alt and Scale. That's it. That's really it. And whether I find an opportunity on the daily on one asset and on an hourly on the other, I'm okay with that. But I'm not overwhelmed by trying to monitor a million different things. I use TradingView's ability to set alerts, right? Which you all should be doing. And I try to do it in support of the scripting on any time frame that I'm looking at. So if I was trading a shorter time frame of this thing, well, it's super choppy in here, isn't it? But I don't want to trade that.
You said something cool earlier. Like you said, you had a lot of fun. That's something that I've been doing lately. That's how you know where you're starting to get into a comfortable rhythm.
You're talking
Because
about Layer, yeah.
yeah, when you said, yeah, I've traded layer, that's been fun. And for me lately, I've been having fun just trading Bitcoin because I know it so well, but using Bitcoin's price action to help me take the trades that I make really good gains on with Solana because it changes
Mm-hmm.
really nice and it's always like lagging behind Bitcoin a little bit. So sometimes, and not all the time, of course, nothing is concrete in this. That's one thing you got to accept for sure. But for the most part, it'll let me get an idea. Okay, Bitcoin just did a big move up. Solana hasn't moved up. Is it coinciding with any of these moving averages? And is a blunt indicator also signaling, you know, now that Bitcoin's doing this run, now you'll see Solana kind of get hot and been able to catch these runs because Solana moves pretty decent. It's pretty volatile as far as moving and as far as price action.
Yeah, yeah. No, I agree. And ultimately, if you can make some extra money and enjoy yourself doing it while you learn, I, like that's a home run. Like, what's so hard about that, right? Like, isn't that what we all kind of want to do? Right? Just have
Awesome fun
fun,
to me.
enjoy what we're doing. So what we have on the indexes? This is ES, which is the contract for the S&P 500. This is the Nasdaq 100 because it trades in real time. I can chart it in real time here. This is some pretty choppy trading, and you can see that choppy trading is happening along this shelf. So what does that tell us? Or what, I'm going to speculate on what it's telling us, and I hate to say that word because we're not in the speculation business, but what I believe is happening when you see this kind of consolidation on a shelf like this, it's indecision. Like I feel that's what we're dealing with right here, is indecision. These are all time, look. Let's go to the monthly because I think it's going to be a little more telling. This is the monthly NAS 100. It's been basically one big move higher. Pretty much straight up. It's probably COVID in here, right? The pandemic and all that stuff. If I didn't know, let's say I was under a rock for several years, which some people might claim that I have been anyways. But let's just say that it's true. and I didn't know there was a pandemic, would I have been any more or less capable of trading the market?
You could still trade it. I think it would be almost better if you didn't know because it's just clean.
That's right.
It's pretty visible that you had a chance to take a short, even if that was during COVID. I mean, you can capitalize on that, but then you got that bounce on the 50 and it starts trading right back up. I mean, if you missed the news and you really didn't care, you could honestly still trade the thing.
So price broke the 50 back in here in 2010. All right? And basically, from what I can see, I don't think that's a touch, but it looks like it broke it in 2010. Was this in here the first touch of the 50-day moving average since 2010? Yeah. What do we expect on first touches? In this case, support, right? Because price is pulling back. And that's exactly what we got. We literally got support right at the 50 on the monthly during COVID. If I had no idea that there was a pandemic, I would not have been disadvantaged at all to trade the chart. In fact, some would probably argue, like Rico said, maybe in a better position to trade the chart because why? There's less noise. That's why. The noise is the shit that gets you in trouble. It makes you think about things that aren't important. Not to help you, but to help maybe somebody else. Maybe somebody wants you to think that way. And I don't want to, get kind of all conspiratorial, but the only thing that matters is the price on the chart. That's it. This thin blue line here we know is the lower value range on the volume profile for the monthly NAS 100. Look what it picks up. The benching of this past price along in here. That's where you found your support along with the 50. And lo and behold, you finally get a green light and off it goes. And even through all of this drama in market volatility, even back here on in April, right, when we came all the way back to 16.4, 16.3 on the NAS, notice what's not here. Sell signal. Just doing what we're told. Yeah, you probably saw a few on the weekly, but as to your point, as long as your longer time frame is still dominant in trend, you can feel safer. And it doesn't matter the time frame. It doesn't matter the asset. It doesn't matter the market. It is simply price on a chart. And what we see on a chart is a language. This is everything we're looking at is a derivative of mathematics. And if you can acknowledge that math is a language, like most people can, then you should acknowledge that this is a derivative of that and it's a language unto itself that's up to us to learn it. And it's not that hard. Yeah, there are people that want to make it hard for whatever reason, but it's not that hard. Everything that you see on your chart is a representation of something valid, something that you should be aware of. Whether it's time, whether it's price, whether it's volume, whether it's momentum. It's all relevant. How we decide to interpret it, though, is up to us. And if we're not looking at the right things, we can't make the right decisions. I'm showing you the daily of Bitcoin because it's probably the noisiest space in the world. It's everything from a currency to digital real estate to digital gold to, list goes on and on and on. That is all noise. It's all noise. You want to own it or you don't. You either want to trade it or you don't. It's transferable trust, right? And that's kind of what the market people would say about crypto. They don't know how to look at it because there's nothing to evaluate it on other than people's desire to buy it. All of that comes out on your charts. What people say, not important. It's what money does that matters. And you have to determine whether or not you believe everything that you hear someone say. This is not a place, my Telegram is not a place where people come to pontificate about the economy or about the stock market. There's a million other places you can go to do that. But if you want actionable insights that you can use in your trading today, then yeah, come on, hang out with us. Because there's other people in there that have some really good perspective too, that even I've learned from. But it's a place where you go to learn how to read price on a chart. No one's going to give you calls. No one's going to give you symbols on things to trade. That's not what we do. We want to teach you how to read price on a chart. We want to teach you how to fish so that you can supply the fish for yourself. And it's a skill and it is a skill that no one will ever take away from you. Whether your parents believe in what you're doing or not, whether your friends think that you're just absolutely crazy, whether they think that, you can't tell anything from lines on a chart, you have to block all that out too. Right? Like my own father, God love him, was one of those people that unless he could see it, feel it, and touch it, he didn't believe it. Right? And he used to think that all of this was just hocus pocus stuff. You can't be the only one that knows how to do this. He was right. I'm not. There's lots of people that know how to do this. Can you find them? Can you listen to them? Well, that's up to you. But no one will take this away from you. And it doesn't matter what you trade. This is a monthly chart for the 10-year Treasury. So I told you before, there's a handful of things that I keep an eye on all the time. The US 10-year is one of them, the US dollar is the other, and oil. And obviously the indexes. And from those few things, you can tell a lot about what's going on. I am not interested in the whys. I do not care. And I know that sounds a little harsh, maybe cold. Maybe it even sounds ignorant to some, and I can appreciate that. All I'm interested in is what this chart tells me. I do not give a rat's butt about what someone thinks the 10 years going to do and why and what the new policy of this is going to mean to it, and so on and so on and so on. Just lock yourself in a room and just talk. Because that's all you're doing. I don't care why. I don't need to know why. All I need to know is when. The chart told you to buy the 10-year in January of 21. Doesn't matter why it told you to buy it. Doesn't matter who the president is. Doesn't matter who the Fed chair is. Who gives a shit? Because all that matters is this is what the chart's telling you to do. Can you do what the chart is telling you to do or not? If you can, then do it. When you see an action, take it. Don't sit there and pontificate for yourself for weeks on end or hours on end on whether or not you should make a trade. Get over it. Listen to the market. The market's telling you everything you need to know. You can go into a space and mind numb yourself all night, or you can spend a few minutes trying to figure out how to make money. That's what this is about, making money. Not pontificating and writing a book. Making money. The chart is telling you how to make money. You want to buy the 10-year? Buy it here. You want to sell it? Sell it up here. Where was it going? It was going to 5%. Why was it going to 5%? Well, it's really simple. Really simple. Because current price revisits past price. That's why. What do you think is up here? Do you think this is the only thing that could be hanging around up here? Bet you it's not. Oh, what's that?
Got to be a moving average. I don't know which one the orange one is, but
It's a 1,000-day moving average on a monthly chart.
Oh wow!
That's
I
what
mean,
that
it's right
is.
on the money. Yeah, that's
That's a
wild.
1,000-day moving average on a monthly chart. Now, I don't think he's in this room, but my good friend Joe G, he and I sat in my Telegram chat one day when the rate was like 1.819. It wasn't 2% yet, and we sat here and we looked at the daily, the weekly, and the monthly for the 10-year. We said to ourselves, do you see what I see? Do you see it going to 5? Yep, I do. And we both agreed that it was going to go there. Did it sound batshit crazy? Absolutely. I get it. All this stuff will sound crazy at one point when you make everything go parabolic and you spread all your ranges out. Yeah, everything's going to sound crazy after a while on the retrace. But what was happening? Current price was looking for past price. That's why you use multi-time frame analysis, because you'll find it. And it did. And it's going to find it again as well, in my opinion. Not that it's worth anything, nor is it financial advice. This is just, it's just like following the dog around the yard. That's all you're doing. You got a buy signal on a monthly chart of the 10-year with this doji. I don't know. You do the math. Maybe it goes higher. But all I'm saying is that current price is revisiting past. On the move up, we're looking for levels of past price, right? You want to start trading above this level here. And in doing so, you're going to check this level, and you may retrace and pull back and then take another run. That's okay. But ultimately, you're looking for this. Now, when the rate was under 2, 5% sounded insane. Does 5% sound insane from 4.47? No, shouldn't. But people that'll make it sound that it is are probably ones that have something to lose. That's why you just read the charts, or I just read the charts. The chart is telling you everything you need to know. Whether we listen or not is up to us. But the chart's telling us everything we need to know. Since we started doing these streams again, and long before that, I've been telling you 6166 was my number for oil. I'm pretty sure it's a real number. Look at the consolidation. Tag, 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 tag it. And when did we make that call? When oil was $95 a barrel. We're trading upwards of $95 a barrel. Did it sound bonkers? Saying that oil would see 70 before it saw 100 at $95? Yeah, probably to some. Who are those people? The ones that don't know how to read price on a chart. And some of those people, by the way, are analysts. You kidding me? My God. Same analysts in 2008 didn't know how to read their own charts. Yeah, it's a credibility thing.
I love you, blood. You got me over here rolling, bro. They're over here pontificating. The word of the day. Don't pontificate. Don't be pondering
No navel
around.
gazing. No navel gazing in here. Yeah, we don't navel gaze, right? But no, you
Yeah,
just
that's
got to
what's
read the
cool
chart.
about it. You know what's cool about it is that you let people figure out that it doesn't matter the indicator. It doesn't matter the ticker, I should say. It doesn't matter the indicator, and it also doesn't matter up or down because you showed us multiple different trades where either you're knowing that it was going to go up when most people probably didn't think it was going to, just like the one that you showed just a little bit ago. I think it was the Nasdaq. Um, and also some of the ones that people didn't think it was going to go down. So it's not about even being biased towards being a bull or being a bear. It's literally comes down to what you're saying. Just read the chart,
Mm-hmm.
and that confidence will come where you're okay once you start stacking up some of the wins. Where you're like, I'm okay. I'm looking at Solana right now, just turning it right back around. I'm listening to Black, and eventually it gets where it's fun. Where I'm like, okay, now it's just going to turn around. I'm okay with accepting these movements because I'm just following the treasure map. That's all I'm doing. There we go. I mean, I can handle that. That's a sexy downtrend. I can do that. If it's scary on the 5 minute, yeah, it is. But I know when these things, you start to kind of figure out when they get exhausted. And this one already turned into a decent trade.
Yeah.
And I can chip away at this stuff all day almost until I catch me a nice runner. And then that's the one that, you really like. But it's almost like a game of double dutch sometimes. I feel like I don't know if you guys played that where you're from, Blunt, the jump rope where two ropes, where you got to stand on the side and you got to time it just right so you can get a nice run out of it. You don't get tangled up.
I did see other kids playing that game. Yes.
Yeah, and then when
Just kidding.
and then when it's done, you got to jump out. Otherwise, you
Yeah.
get tangled up, right? You want to regain your confidence and regain your, as just the trend that it's going with. So Um, I've been a little bit more riskier lately because I do like the indicator. I think anybody using it should start off on the higher time frames because it's not noisy at all. But once you start to get really comfortable with it, I can use it almost like on any time frame and just get a nice little trade, and I'm cool with that. I'll go walk away and smoke a cigar and continue my smoker's cough. But yeah, it lets me just take it easy. Either whichever way it's going, I'm okay with that.
Yeah. It really is a mindset of just doing what we're told and accepting the fact that we don't know more than price does. So if we don't know more, and we're always going to be disadvantaged trying to know more, then we better just follow it. It's probably a lot safer. Does anyone have any other questions or symbols they want to look at before we wrap up? Or
No, I'm all good. I'm about to get ready for the space for XPX in about 40 or 57 minutes. So no,
well,
just gonna enjoy the rest of the day.
excellent. I'll try and jump in there, and maybe we can kind of dog and pony the thing a little bit or something.
Yeah, yeah, come on in, man. Let's have some fun. I mean, it's for everybody to come in, and I would love to have you there. We can show what you got going on. I'm a huge supporter of what you do and all your knowledge, and I like that you're willing to share with everybody. So if
Yeah,
you
well, I
know you want to
appreciate
come
that.
up, yeah, for sure, bro. Anytime.
And you guys have XPX Pay is actually a real thing, So it's a debit card program, I believe. That's where you can fund with crypto, which is really
Yeah,
cool.
yeah,
So
yeah, for sure.
yeah, so you should
Yeah,
check it out with XPX Pay.
yeah,
Hey,
we just crossed 6 figures in paid orders. So we got proof of work, customer services there. I'm always answering questions for everybody and trying to get back to. Actually, we just do, right? We just always do. So yeah, we definitely have proof of work.
Awesome. I'm sorry, did someone have
hey,
something?
bro.
Yeah.
Yeah. Hey, you know what? I was looking through. I was trying to catch most of this. I'm gonna have to put it on replay. But one of the things that I was trying to capture was the Fisher. I think it was the
Mhm.
Fisher tool you were using.
Yeah.
I haven't noticed that before. Is it available on TradingView or
Yeah.
which one is that?
It's called the Fisher Transform Indicator by Ellers. I think that's the one I'm using,
Fisher
and
Transform.
it's I believe it's you don't need to subscribe to it or anything like that. It's part of the like indicator package, and
Okay.
I don't do anything to it. I don't adjust it or anything like that. It's something that I use right out of the box.
Gotcha.
I've just blown it up here. This is what it looks like full screen. And what I like about it is that it doesn't give you a lot of false signals. Right? So I typically like to find areas where it's, here it's very overbought in conjunction with my stochastic RSI that's very overbought, and then it starts to
I
fade.
see.
Not much of a move came from there, but typically that's where I like to use it, right? Oversold, and then moves higher. A little
Okay.
overbought again in conjunction with the RSI. It validates it, and what I like about the Fisher is that I trade off three principles: fibs, fractals, and filters. So I like to filter out the noise. That's what the script does. That's what the Fisher does. Fractals, that's looking, forward and backward to help you kind of manage a trade. And then the fibs give us those reversal points, right?
Right.
That's all.
So the Fisher is what it reminded me of was the RSI, and that's just kind of to work in hand with that.
That's
I
how
guess
I
the
use
valid.
it. Yeah, that's how I use it. I'm using it as a means to validate. So I
Nice.
see something on I love these points. So I see this, and one will happen
Yeah.
first. Stochastic RSI usually clicks first, then my Fisher goes, then the MACD. I'm
I
usually
got you.
already into something by the time the Fisher goes, though.
No.
But yeah,
If
it's pretty simple.
thank you. If you had a second, I was actually looking at the Jasmine chart, Jasmine USDT and Blowfin. I just started, just diving into charts a little more often, and on the daily and the 4 hour,
What's the symbol
I
for that
think
again?
the
Is it?
JASMY, Jasmine.
Yeah. Okay. Gotcha. You said blowfin. There we go. Okay. Here's the daily.
Yeah, the volume profile looked good on. I think it was the POC. It was under the POC, I believe. On daily in the 4 hour. Because I typically just stay with the daily, the 4 hour, and then I, monitor the 15 minute.
Mm-hmm.
And that's kind of where I would like to put in my trade. Um,
So you can see how there's a little bit of an allergy to the POC here, like it based along it and then broke it, and it seems to be struggling with this level as well. So this is
right.
where we kind of, and we're working under a sell signal on the daily. So this is kind of where we'll back up to the 4 hour, get an idea of what we would be looking at.
Yeah, you see the blue lines are the support and resistance, right?
Yeah, so this
So it's
is
kind
this
of,
is the value range, the lower value range,
yeah,
and this is the upper value range. So on this time frame, for example, if you were trading above here, above this level, that would be a premium.
right.
Trading below here would be a bit of a discount.
Okay, good. That's what I was,
So,
that was the game plan, is to try to get in.
like, I think what
Um,
you're trying to see here is this level at what is that? 0.018.
mm,
That neighborhood is kind of a structural level. So if price breaks through that on this time frame, which is the 4 hour, maybe it does run and try and take out the previous wave's high. But you can see there's a structural level here.
you sure? Yeah.
So
The one thing that I thought was kind of odd is the upper value line.
Mm-hmm.
It didn't have a lot of bars for the volume profile that's there on the right.
Mm-hmm.
See how they kind of retracted a little bit. I noticed. I think you mentioned before. Usually, when they're lower on that side, it'll shoot through. I mean, it doesn't really want to stay around those lines. So that's
Well,
why I was just confused because I thought there was supposed to be a bigger bar that it would be attracted to.
well, what? So let's just go to the daily for a second. What was that? The 4 hour we were just looking at? I just want to get this level.
Yeah.
So this is. Okay, so that upper value range on the 4 hour is roughly the point of control, the POC on the daily.
Mhm. Yeah.
So
So that would be big resistance.
it would be, yeah, potentially, yeah.
Okay. Okay.
Let's look at the 1 hour just quickly. So the 1 hour actually shows us that structural level quite clearly, really through here. So,
I see.
and this is again, this is why we use multiple time frames, but it's not all bad, right? So if we look at this, we can establish that this is a structural level on this time frame. We are, however, starting to show a little sign of life. If this was to move higher, would this not be a target? Sure. Right?
Right.
Absolutely, it would be a target. If you break through it and you get into this gap, then yeah, price could shoot up there. These are all the things that we don't know what's on the other side of that candle. We can only trade what's in front of us. On the 1 hour, this is a confirmed entry signal long. Where would you expect some resistance? Up in here? So we talk about, yeah, I talk about how you can use the 5 EMA on different time levels because different time frames, because what it's going to do is I find that it gives us, so here this point on the white 5 EMA lines up perfectly. So where would I expect some resistance? In here. If you break through, well, then that's another conversation. But look for those points.
Yeah, I
You
just
find they
noticed that
line
where
up.
you hit those 2 points where they lined up, that would be, I guess, a form of support resistance. I
Mm-hmm.
like that.
Yeah, yeah. That's a little pro tip on the script. So.
Right. And I just had a little question. I guess, I mean, assuming if you were taking a look at the 15-minute chart, what my idea would be is kind of like short trades. I'm starting to get more familiar with longing and shorting with leverage, with Blowfin and BYDFi.
Mm-hmm.
And I wouldn't particularly like to be in the trades for days.
No,
So
not like that.
I don't know what
So
would be the best strategy.
a lot of that, and this is kind of, I'm sure a lot of people in the room have the same kind of question. Like if you're using leverage, how long do you actually want to be in the trade? And a lot of that's going to depend on how much leverage you're using, right? Because the more leverage you're using, the less likely you'll be in it for an extended period of time, for different reasons, right? Because if you're highly leveraged, you're going to have a super tight stop and so on and so forth. Plus, there's the cost of carrying it and all that stuff. So, the higher the leverage, the shorter the time frame that you'll be in it.
Yeah.
If you're trading alts, for example, on BidFi or even Blowfin, and you're at 20x, doesn't matter the exchange. If you're at 20x on an alt, that's like 200x on Bitcoin. That's what it's going to feel like. And you have almost little to no wiggle room at all. So,
Yeah, I've been scared of the high.
yeah,
I've been trying to stick with 5 and under,
yeah,
2 to 3, honestly,
sure, and
just getting my feet wet.
that's great advice for everyone else. Actually, what you're doing, so you don't need to use tons of leverage. Just you're able to magnify your earnings a little bit doing what you're doing and not taking on a ton of risk, and I think that's a good thing. So
Because I didn't want to go anything lower than 15 minutes, so I guess I just monitor the daily, like you did, set up your values,
yeah,
check it out on the 4 and the 1 hour, and then I kind of highlighted on the 15-minute there.
this does have some, like on the daily. If we go back just quickly, um, there's a little bit of volatility in here. There's some healthy moves. As long as our job is to get you in at a safe place at the right time, to put you in the driver's seat early, so any decisions that you have to make are easier and ultimately are just ones that are going to benefit you. And that's the only stuff
Right
you need
on.
to be thinking about. So that's the goal.
All right, all
All right,
right.
guys.
Well, appreciate you.
Well, thank
Thank
you.
you, guys.
You're very welcome. Anybody else? I guess not. Well, listen, the winners from our session on Thursday for the trading bonus, they should have, or I know they've been awarded, so they've gone out. And the winners from today, I will select, and you will know if you won when that money shows up in your account. If you don't have a BidFi account, please grab one. It's a super slick exchange that I think you're going to like. And the link is, of course, in my profile or on our X announcement as well. So I wanted to thank you all for coming out today, and we will see you on Thursday, and we will see what's happened between now and then. Thank you, everybody, and have a great day. Bye for now.